Hi there, you're with BQ Prime, and this is the fine print. A single common market that's subject to a consumption-based levy and does away with the cascading effect of taxes. These principles formed the foundation of the rollout of the goods and services tax regime 5 years ago. At the time, businesses had expressed concerns around increase in compliance burden, transition, reconciliation, and availment of credit. Then, e-invoices and e-bills became the next cause of worry. The push and pull on rate classification and structure continues, and disputes on most of these issues have kept courts busy. I'm tracing this journey because the 5 year milestone is a good time to pause and assess a law that's impacted all businesses, big or small. Over the course of next week, join us here on BQ Prime as we ask companies, tax professionals, and lawyers, what did GST achieve in these 5 years and where do we go from here? We're kicking off the special series with Seshagiri Rao, Joint Managing Director and Group CFO at JSW Steel, and Mukesh Butani, Founding Partner at BMR Legal. Mr. Rao, Mr. Butani, many thanks for joining us on our first of the many episodes that we plan to do on examining the GST journey in the last 5 years and where we go in the next five. Mr. Rao, I'd like to start with you to get a little flavor on what life was for a large group like yours in the run-up to the GST implementation, and when the GST actually got implemented. What was your biggest apprehension at the time?
So GST was to be introduced in the year 2017. The debate to introduce GST, in fact, started 5-6 years before that. So, in fact, industry was getting familiarized about GST and its benefits. So, it was real excitement when it was to be introduced in the year 2017. Because everybody expectation was GST is a one nation, one tax. So it would give a huge amount of benefit to the business. If you really see prior to 2017, the businesses were driven by tax. So where to set up warehouse, how to do the business. So based on the taxes that are involved in doing business, that has driven the business structure. So GST after introduction, I think it is the reverse of what has happened prior to 2017. There is a great relief. As expected, the cascading impact of the taxes that were there prior to 2017, that impact has really come down. So that way there is a huge amount of benefit. It is a big transformational reform, indirect tax reform. And the objective of the reform is to increase the tax base and to evade the taxes which was being done at that time. So there were a huge amount of benefits the business and the country benefited on account of GST. Then if you ask me what are the problems we have faced during the implementation, I think there are a series of issues. First is the transitional provisions. Even today, there are a lot of disputes as regards to the claiming of the prior period taxes that are to be availed at a later stage. So there are several disputes with regard to that. That is one issue. Number two is the kind of returns which one has to file and the compliances and getting input tax credits. So these issues still a major worry as far as the industry is concerned. So still we are struggling as regards to those provisions. But if I put it one side, the benefits of GST and the issues that are involved even today, I think the benefits will outweigh as regards to the problems which the industry is facing.
Sure. I'll come to your challenges in just a bit. Before I get the flavor of what life was for you, Mr. Butani, because you were engaged with, in the policy making aspect of it as well at different stages in the sense of an advisor. Help me understand. Give me a flavor of what you imagined the implementation would be like, and was there anything in the process in the last 5 years that took you by surprise?
Well, I think to add to Mr. Rao's list of objectives, we have to step back and realize that we have a constitutional document since 1950, which kind of divided the powers of the federal and the state government. So that the GST required a constitutional amendment. That, in my view, was a significant achievement, because you're now giving the rights both to state and center, or rather, you're giving dual rights to both. Very few countries have that system. Canada is one prominent country that I can think of. In terms of implementation, well, on a more philosophical note, we Indians are very good thinkers, but we are not the great implementers. And that's not just true of our government, but also true of us as Indians. So we knew that there would be hiccups, there would be bottlenecks in the implementation process. Mr. Rao has clearly laid down what those processes, what those difficulties are. I think, in my view, the GSTN, which is the backbone, suffers still from many difficulties. Let's say, for instance, let's take a case of input credit. If the GSTN system is not working appropriately, input credit is bound to be a challenge. The second, of course, is the level and the degree of orientation that the GST officials will have insofar as the usage of the GSTN system is concerned. Please bear in mind that you're dealing with, you may be dealing with a common class of revenue officers, but the cadre of revenue officers from the central government and the state governments are not very similar. And third, to top it up, is the political slugfest that invariably happens between the state and the center, as a result of which the civil servants also get pulled in different directions. So I would say that the root cause of our challenges on implementation is, one, the IT backbone, and second is the degree of training and orientation that the officers have. Because even if the IT backbone works efficiently, if your officials take a view which is contrary, let's say, for instance, the transitional credits, then the taxpayers are helpless. So I think that really sums up, in my view, what the current challenges on administration are.
Sure, that's helpful, Mr. Butani, and I'm sure viewers who were plugged into the 47 GST Council meeting, in which the Revenue Secretary mentioned that the IT group of ministers sort of committee will now be a permanent one, and which would take input from industry and from practitioners, and sort of give suggestions that will be implemented once GST Council okays them. So that gives some comfort to say that, look, they're also realizing that this limb of GST implementation needs to be improved, probably with much more frequency than some of the other suggestions. Mr. Rao, I'll come to you to get a little flavor of how your business has evolved in terms of interaction with your vendors, because one sort of overarching aim of GST is to get the entire supply chain, value chain plugged into the GST system. How has your vendor engagement changed with the GST rollout?
As far as our group is concerned, we have very advanced ERP systems within the company. Over and above that, we have an Ariba, where all the vendors are already onboarded in the Ariba system. Many of the vendors, excepting service providers and small MSMEs, many of them today are in the Ariba system. Therefore, the issues relating to GST reconciliations are limited when compared to other companies. But this may not be the case for everybody. If you look at small companies or even reasonably medium-sized companies, the problems relating to getting data from the vendors and then ensuring that the compliances are done is a very, very difficult job. And the way today the provisions relating to input tax credit claim, where the responsibility is completely on the buyer to ensure that the reconciliations are proper and the claims are proper, and also we have to ensure that the supplier has to file the returns properly and also ensure that he makes the payment. So that type of onerous responsibility in claiming input tax credit, either big or small for any company, is a big headache. Over and above that, what we are seeing, there are a lot of issues in generation of returns by the system itself, the GSTN system itself. So that return is delaying the overall claim of input tax credit and blocking of working capital. But there are a lot of issues relating to that. But as regards to treatment with the vendors and onboarding them and see that the compliances are done as efficiently as possible, the industry has been working very hard on that. But these bottlenecks, I think government has to look at and see that there is a seamless flow of input tax credit. Eventually, that is what is to be achieved in the GST. Otherwise, the cascading impact of objective is not achieved. I think that is what industry is looking forward. The input tax credit should flow seamlessly. That is number one. Number two is this multiple registrations in each state, and there is no fungibility of claiming input tax credit from one region to another region or one number to another number, even though company is same. This is also causing a huge amount of issues. At one region, there is an accumulation of credit. Another region, we have to make the payment. Again, blocking working capital in this regard. At least some provision of adjusting the credits, at least CGST, is essential to give some relief on input tax credit flow to the industry.
What needs to be done or what can be done to address some of these issues?
I think some of the issues can be addressed by the taxpayers and not necessarily by the government. For example, Mr. Rao spoke about the challenges that small and medium enterprises have because of the quality of ERP systems or ERP systems, if any, that they are using. The second is more at the policy level. I think that the effectiveness or the efficacy of the GSTN network is still critical. I think there is scope on part of the administration to simplify the filing requirements, particularly for the services industry. Imagine a bank with multi-state operations and being made to file returns in all the states. So I think you should remember that historically manufacturing organizations were under the erstwhile VAT system were used to filing multi-state returns. But the services organization were filing one central return, which is the service tax return. So I think there is scope to simplify the compliance procedures as well. So it's a combination of the simplification process, not initiating audits, not raising demands immediately, making sure that all the opportunities given to the taxpayer to explain where the credits are or why the availability of credits is a challenge. Trying to recover money just because of lack of availability of credit, in my view, is the government trying to collect more taxes, which subsequently will be set aside even in an administrative appeals order. So I think this is really it's a large laundry list depending on which industry you're looking at it, which segment and class of taxpayers you're looking at it. But it's a lot to be done on the administration front.
That was going to be my next discussion point about, Mr. Rao, what has been your experience with the administration of this massive change in legislation? A lot, of course, of interpretation is on jurisdictional officers, which we've seen arrests, we've seen investigations, we've seen show cause notices, we've seen denial of credit. So, I mean, the government framing the policy is one thing. Could you give me a flavor on what your run-ins with the administration have been, if at all?
So the issue today is there are several authorities which ask the same information. That is the problem. One is at the state authorities, another is central authorities, again there are investigative authorities. So these three together, we have to provide information. That is one, that anyhow we can continue to do that. As long as we have not done any mistake, we can continue to provide same information to everybody. But the problem is litigation is continuing. That is one. Number two is, even though there are genuine cases, when it is brought to the attention of the authorities, including government, wherever there is loss of revenue, notwithstanding it is fair and unfair, that is not being favorably considered. For instance, if there is an accumulation of input tax credit in the case of services, there is no provision for refund, which is there in the case of goods. Why it should not be refunded in the case of services? It is fair request from the industry, but not being considered. So that way there are series of inverted duty structure issues. Even those issues, some of them are addressed yesterday, but there are several other issues which are still troubling the industry, where there is accumulation of credit and not able to claim. So I think these issues have to be looked at favorably, not from the revenue point of view, but the fairness point of view. Then I think industry will be able to really tackle those issues.
Sure. Mr. Butani, I believe, and we'll get to know more on this as the specific circulars come out. The problem that Mr. Rao pointed out, that there is no refund for the services. I think the government has changed the formula in some fashion in the yesterday's meeting to be able to, let's say, make the impact of it less onerous.
Yes, so there is a benefit that has been given for a specified class of businesses. It's called for insofar as the unutilized input credit is concerned. And the change in formula suggests that the refund mechanism, wherein the officers were taking into consideration the inputs and input services for payment of output tax has been reviewed. This, in our view, would help taxpayers avail input tax credit on input services. There is also an amendment in the CGST Act, which provides for how pending IGST refund claims have to be handled. This is particularly relevant for exporters. So exporters were classified in what they call it as risky exporters, which require detailed verification by the GST officers just to make sure that there is no case for over invoicing or invoicing of goods that never left India. Now it is provided that refund claims for certain forms of export of goods and services will be streamlined. This was a particular challenge for the IT industry as well. There is also a concept called the recredit of the amount and introduction of the electronic credit ledger. This electronic credit ledger is going to track accumulated input tax credits, which are otherwise eligible for zero duty on the export side or reduced rate of duty. I think this is a scheme that will play out over a period of time. And I think this, in my view, is a very serious attempt to be able to address the input tax credit for certain class of taxpayers.
Sure. Helpful decisions. Of course, the fine print of it will become more clearer as these circulars get notified. Mr. Butani, we've sort of tried to understand the ongoing challenges. I think on Mr. Rao's list, the top one is the seamless availment of input tax credit. What would you think from here on, given, of course, there are a lot of, decisions were taken in this 47th GST Council meet, which met, of course, after a period of 8-9 months. What on your list are the top 2 or 3 areas where the government's focus should be for the next 2, 3, 4, 5 years?
I think dispute resolution clearly is on the top of agenda. So for the government to sound helpless because of directions coming from the Supreme Court on how the GST tribunal has to be constituted, what should be the qualifications for members. This is an ongoing issue for all forms of tribunalization. I think that this committee that is being set up with the state is really, in my view, to be able to address it. Because if this committee comes to a consensus, then I think it will pave way for the composition of the GST tribunal. There are, so this is certainly, in my view, a very, very positive measure. On the negative side, the government has extended the statute of limitation for assessment of the GST returns by almost a year. Now, part of it is also to be able to compensate the government, the officials, to be able to do the catch-up on the GST audits, which were virtually dormant for the last 3 years. But I think the industry is not going to be very pleased with this move. The third, which was not a part of the GST Council meeting, was the extension of the anti-profiteering authority, a decision that was taken 6 months back. I felt that the anti-profiteering authority would meet its objectives in the first 3 to 4 years of the GST law, because at the end of the day, that authority's limited role is to be able to assess that the industry has been able to pass on the benefits of reduction in the overall transaction tax on the consumer. Now, to say that after 5 years, the industry still needs to be kept under watch by the anti-profiteering authority, in my view, is not a positive measure. I think the government could have considered actually dropping down the anti-profiteering authority. Instead, they've extended it, though not a part of this GST Council meeting. So I think these are some of the aspects on the enforcement and disputes front which will speak out in the years to come.
Sure. Mr. Rao, besides sort of fixing the availment of input tax credit, where do you see the government's focus should be, given that, there are GOMs on rate rationalization, there is a SIPMENT committee fixing the inverted duty structure, which is sort of prevailing in several sort of industries. Those sort of decisions got taken in the recent GST Council meet. For the next 2, 3, 4, 5 years, where would large sort of groups like yourselves would want the government focus to be?
So 3 areas really we are looking at in future. So fundamentally, I think these require a serious look by the government. The first point is when GST was introduced, any item that is relating to business or furtherance of business, so the input tax credit will be allowed on that. Whereas now the exceptions are increasing. So this is to be excluded.
Could you sort of illustrate that point a little bit for
Yeah,
us?
if I look at health insurance for employees, why it should be excluded? I don't find any reason why it has to be excluded. Aircraft expenses incurred by the company, it has to be excluded. Civil constructions, which we do in the projects, that has to be excluded. So the exclusion list, if we go on looking at it, so every time we have to see whether this is related to business or not related to business. It is related to business, but there is an exclusion which is coming in. In my view, when GST was introduced, it is clearly defined. It is related to business or furtherance of business, then it is allowed. So in my view, I think they have to simplify. If it is related to business, input tax credit should be allowed to me. This is number one. The second point which I am looking at is when GST was introduced, they have taken 14% as the tax buoyancy at that time. But if you see the history in the last 5 years, the tax buoyancy is in the range of around 7 to 8%. But the number of taxpayers have increased, tax base has increased, but the buoyancy is not as expected by the government. The point is, if tax buoyancy has to increase, in my view, tax slabs have to be reduced, which is 5 are there, 5 or 6, plus composite scheme rates. If you look at it, there's a huge amount of slabs. So I think the rationalization of these slabs and reducing the rates, which will eventually increase the revenue to the government, that increases the buoyancy. Then looking at different different slabs, and also at very high rates, in my view, will not increase the buoyancy. We continue to suffer as regards to GST, and the industry will have to pay, our consumer eventually has to pay very high taxes. So rationalization of taxes is very, very important. Slabs are very important. Reduction of tax rates are very important. If you look at any other country, excluding the Europe, the tax rate is below 10% as far as GST is concerned. So having an 18%, 28% tax rate is not good either for the consumer or for the tax points in future. The third important point which I would like to see, energy is a very, very important component for the manufacturing industry. If we look at it, 30 to 50%, depending on the industry in which we are operating, is the cost of energy. So cost of energy is not part of GST. So therefore, the cascading impact of the taxes still remains on the industry. Therefore, there should be a consensus. I understand there is some dissonance as regards to GST Council. These petroleum goods, real estate, and whatever was excluded from the purview of the GST, which the industry is really paying extra taxes, bringing them into the fold of GST as early as possible is very, very important in my view. I think these three will relieve the industry in reducing the taxes and also increasing the tax buoyancy for the government.
Three very contentious areas, Mr. Rao, where finding the consensus within the council is going to be a tall task. Nonetheless, thank you very much for laying out some of the asks that the governments should focus as the law matures and we move on from the initial teething troubles of a law of this nature. Mr. Rao, Mr. Butani, many thanks for joining us on this special series, the first of many, where we're trying to assess the GST law, its implementations, its challenges for businesses in the next so far, and what should be the course of action here on. Thank you so much for joining us here on PQ Prime, and thank you so much for watching.